Happy VA Wednesday. Today we're going to be talking about using your VA benefit by a multifamily home. I hear this one all day. Like, so many of you guys are calling me about this, which I think is great. As always, before we start, I am licensed in 48 states to do mortgages. I love doing VA. You guys know this. I'm happy to help you out. Pick a time on my calendar and we can talk about your scenario to put you in the best spot to success. I mean, it's that simple. Okay, so there's a couple things you guys need to know about multi-units, because what happens a lot is the basic dream is that with VA, you can use your benefit, buy a 4-unit, put nothing down, have no money in the bank, and use rental income to qualify for the mortgage. That is not how it works. I want to put that out there first, because this is usually the most disappointing part of this video. Whether it's a 2-unit, a 3-unit, or a 4-unit, the key is going to be that if you want to or need to use rental income to qualify, okay, you have to have two things. Number one, 6 months of reserves. That's principal, interest, taxes, and insurance. So if the property you're buying is $3,000 a month once we calculate the total payment, and you want to use rental income to help you qualify, you need to have $18,000 in the bank, or a little bit more in a retirement, some level of funds that we can source that are going to sit there to act as reserves. Okay, 6 months principal, interest, taxes, and insurance in order to count rental income. That is not a lender overlay. That is in the VA guides. And I'm going to have some links to the VA guides for you guys so that you can verify. Because a lot of times I'll get pushback and it's like, guys, just go to the guides. Like, I read them. We can read them together. It will be fun. So 6 months principal, interest, taxes, insurance. Okay, that's number one. Number two, in order to use rental income to qualify on a multi-unit, you need 2 years landlord experience, consecutive years. Yeah. Or you're going to have to hire a professional management company. We're going to have to take that into account. Leases are going to have to be in place for all of this. It is not often that I see the moon, the stars, and the sun all come together to make this beautiful situation where you can utilize the income to qualify. Okay, so that is usually the biggest obstacle I see. First of all, it's that you need the income to qualify and you have no reserves. Okay, and no rental landlord experience, and that's just a deal killer right there. Okay, now let's say that you don't need to use the rental income to qualify. And realistically, from a conservative standpoint, would I buy a rental property that I couldn't pay for if my tenant stiffed me? Not unless I had a lot of money in the bank, okay? Now, with VA, if you don't need the income to qualify, you do not have to have the reserves. Okay, the reserves are if you need that income to qualify, based on the fact of, hey, if one of those tenants stiffs you, you need to have money ready to go so you don't lose the property. Okay, now, if you don't need their money to qualify and it's just gravy, which is the goal, guys. The goal is to be able to qualify for the payment with your own income and then have all the rental income be additional income to you. The goal is not to stretch yourself so thin where if Bob, who's now your neighbor, yeah, because you got to live there, Bob next door isn't paying. I don't know about you guys, but if I lived in a property with, 3 other tenants and I was the owner and someone wasn't paying me and I desperately needed that money to keep my mortgage paid, it wouldn't be pretty. It wouldn't be pretty. And I don't know how you'd react either. But the bottom line is that if you guys want to count that rental income, you need landlord experience or professional management company and 6 months principal, interest, taxes, and reserves. Okay, if you do not need to count that rental income to qualify, we do not need that. So whenever I'm qualifying someone, I am always going to be trying to qualify you without that rental income, just because I very rarely see someone and the property and the leases and, I rarely see all those stars align. Okay, so that's the first thing. Now, The second thing to know about VA and multi-units, this came up recently, which is why I'm bringing it up to you guys. So VA actually has a guideline where if two veterans, you've got two eligibilities, want to buy, let's say, a 6-unit or a 7-unit or an 8-unit, right? They can each have 4 units each and they have to occupy, right? That VA allows that. Okay, well, here's the problem, and I found this out recently, and I've only had the situation come up once. It's one of those other, rare occurrences, but I want you guys to know this because I was just looking online today to verify some of the information I'm giving you to make sure it wasn't lender overlays. And someone's like, oh, you can easily do this with VA. And the VA guideline says you can. Well, guess what? Finding a lender who will actually do a 6, 7, or 8 unit, even 5, with 2 veteran entitlements, I don't know anyone that's doing it. And the reason is this. So VA has the guideline. The lender does the loan. We ultimately sell that loan to Ginnie Mae, okay? And VA insures the loan. Well, Ginnie Mae writes their own overlays. So Ginnie Mae has an overlay where they won't buy loans more than 4 units, even if it's VA. Yeah, seriously. So this came to me because a gentleman was having an issue with his lender, and his lender, I didn't think it'd be a problem either. And so his lender was having a problem with this. He couldn't find anyone to do the loan. And I'm like, that's so weird. Like, I know that guideline. I hadn't personally had it come up, but I know that guideline. So I went to my company, and that's what I really love about where I work and why I'm always telling you guys, ask me questions, call me, get on my calendar. Like, I will run scenarios, and we literally have a team of underwriters that are dedicated to finding us answers. Like, it's cool. So I emailed, our underwriting gal, and I'm like, hey, this is what's going on. I see the VA guide, but he's saying he can't get the loan. What's the problem? And so she's the one that said, Jen, your problem is Ginnie Mae. Here's their guideline, where even though VA is saying okay, and the lender's saying, if we can, Ginnie's saying no. Okay, so it's really important for you guys to know that with the VA guidelines, and in this video, I'm going to have a link to the full VA lender pamphlet, which is what we as lenders look at. And then I'm also going to have a link to just section 4, which nails out this rental income portion. But the guidelines can say one thing, but then you've got lenders who might be putting overlays on that. And then beyond that, you could even have the servicer, or excuse me, not the servicer, the buyer, the ultimate end owner of the mortgage, Ginnie Mae, you could have them putting an overlay. So as of right now, if you guys are looking for a 5, 6, 7 unit, you've got multiple VA benefits, I can't do it. And it's because of that reason. I haven't heard of a lender that can, because what happens is with VA loans, we all sell them to Ginnie. So if anyone watching this has a solution, please chime in. But I did want to bring that to your guys' attention because it's one of those niche guidelines. And I feel like in the VA community right now, a lot of you guys are thinking about house hacking, you're thinking about passive income, you're thinking about ways to maximize your benefits, which is fantastic. It's what you guys should be doing. But I just want to say this one where you're combining 2 entitlements to get, a 5, 6, or 7 unit, that's going to be a real tough one to find someone to do. Okay, because with conventional guidelines, FHA, any other loan program, that is a commercial loan. Anything over 4 units is commercial. VA guidelines are the only one that says it's not, but also keep in mind, VA doesn't recognize a 4 unit as a 4 unit. They just see it as a single family with multiple occupants. I'm not kidding, that's super weird. So I hope this has been helpful. I hope it has not been discouraging. Here's the deal. If you need the rental income to qualify, start stacking cash. In a perfect world, if you are getting ready to use your benefit and you want to build long-term wealth and you want to have passive income, try to find a place that you can afford with your income. Okay? Then if someone doesn't pay you 1 month, you're fine. Also, it's the way to be more stable as you're growing your wealth. So questions, comments, anything, leave them. Hop on my calendar if you have any questions. I am always here for you guys. I hope it was helpful.